BlackRock's Bitcoin fund just bled $500 million. Are they making a huge bet on Ethereum instead?
Welcome back, folks. Time to catch up with the market on SoSoValue Crypto Daily. All right, let's dive right into the market overview. It's been a bit of a red day across the board. The total crypto market cap took a little breather, dipping 1.8% to land at $3.19 trillion. Bitcoin pulled back by 1.3% and is currently trading around $91,400. Meanwhile, Ethereum is down a bit more, about 3%, sitting at $3,015. Most sectors are feeling the pinch, with PayFi taking the biggest hit at a 4.7% drop. But hey, it's not all doom and gloom. The NFT and Layer 2 sectors are actually holding their ground with some slight gains. And we saw a bit of a bounce back thanks to our friends in the stock market. Nvidia dropped some seriously impressive earnings, which helped lift the mood for risk assets like ours. Now for our top story. All eyes are on the U.S. Federal Reserve. The Fed whisperer himself, Nick Timiraos, is reporting that the Fed is basically having a big debate club meeting about interest rates. The minutes from their October meeting are out, and it looks like they're split. Some officials are saying, yeah, if the economy keeps looking good, let's cut rates in December. But a whole bunch of others are pumping the brakes, wanting to hold rates steady for the rest of the year. So what does this mean for us? Well, the market's getting a little less optimistic. The chances of a December rate cut just dropped from 50% down to 30% in a single day. This is super important because interest rates control the flow of easy money into markets, and that directly affects how much capital is willing to take risks on crypto. We'll be watching this one like a hawk. Next up, some seriously exciting news. Kraken, one of the OG exchanges in the US, is getting ready for the big leagues. They've officially filed a confidential S-1 draft with the SEC. For those not in the know, that's the first major step to go in public with an IPO. We don't have the juicy details like share price or how many shares they'll offer just yet. They said the timing depends on the SEC's review and, of course, market conditions. But this is a massive move. It shows that major crypto players are pushing forward to get on the public stage, even with all the regulatory fog. You love to see it. Let's talk DeFi, where we're seeing a fascinating split in strategy. It's like a choose-your-own-adventure book right now. On one side, you have Spark, which you might know from the MakerDAO ecosystem. They've decided to scrap their plans for a mobile app. Instead, they're doubling down on their core strengths, providing deep native crypto liquidity for the big players. And they're not kidding around. They just put a cool $1 billion into PayPal's PUSD stablecoin to serve institutional clients. That's a power move. On the other side of the ring, you have the giant, Aave, which just announced a new retail yield app aiming straight for the everyday user. It's a classic battle: go for the whales or go for the masses. Spark CEO even gave a shout out to Aave, congratulating them while noting how competitive the space is getting. It's a healthy rivalry that shows just how much the DeFi space is maturing. And speaking of giants, BlackRock is making moves again. They just registered the name iShares Staked Ethereum ETF in Delaware. This is a huge signal, not just an Ethereum ETF, but a Staked Ethereum ETF. This could mean that if you own the ETF, you might get a piece of the staking rewards. It's like getting dividends on your crypto ETF. But here's the other side of the coin. BlackRock's spot Bitcoin ETF, IBIT, just saw its largest single-day outflow ever, with $523.15 million leaving the fund on November 18th. Now don't panic, this could just be investors taking some profits off the table, or even better, rotating their capital. Maybe they're getting ready to jump into this new Ethereum product. The plot thickens. Finally, what's Coinbase cooking up? Independent researcher Jane Manchin-Wong uncovered that Coinbase is testing out interfaces for prediction markets and tokenized stock trading. This is part of their big trade everything vision. Imagine betting on election results or owning a fraction of a Tesla share, all right inside your Coinbase app. The leaks suggest they might be integrating with Kalshi, which is the only federally regulated prediction market in the US. This is a super smart way to expand their offerings while trying to stay on the right side of the regulators. The future of finance is being built, one feature at a time. That's a wrap for today's update. Catch you tomorrow, same time, same place. Cut through the chaos. Focus on what drives the crypto market. Stay on top of crypto research, all in one place at SoSoValue.com.